Good morning, everyone. Thanks, people are joining, but we'll start as usual. And I think it is the last session, Sudhakar?
No, last but one.
Sorry?
Last but one, because one more is there on disclosure. Because today we are talking about the approval.
Okay,
one more relating to the disclosure.
Second last.
Yeah.
So today is our second last session of series of related party, most difficult or most talked about, most complicated, and it's applicable to everyone, and related party transaction series. Today's topic is related party approval mechanism. And today, friends, we have our own all people only. And today we have our own senior partner, Ashwini Inamdar, is presenting the session. I wanted to formally introduce her, but she says, no, I just want to be introduced as only senior partner of Mehta Mehta. She is there for more than a decade in this profession. And as I say, she has all-round exposure in all areas, listed, unlisted, SEBI and NBFC and all that. So today she is giving presentation, and in a panelist, we have our own Sudhakar. Sudhakar now don't need any introduction. I will introduce, it's insult to him. I don't want to introduce, everyone knows him. And of course, our own Mr. Bala, which everyone knows. So let's start without wasting the time. And I will just request Sudhakar to give 2 minutes view on the topic, and then Mr. Bala, and then Ashwini, you start the presentation. Thank you. Over to Sudhakar.
Yeah, thank you, Dipti, and good morning, everyone. Today we are entering into the fourth webinar on the series of related party transactions. In fact, each and every webinar is important. I don't say that today's is important, last one is not important, or last one is important, today is not important. Every webinar has its own nuances. In fact, if you see the related party transaction, the subject as a whole, it can be divided into 5 stages. For stage 1 was definitions, stage 2 is the key terminology, stage 3 is the related party transaction, stage 4 is the approval mechanism, and the last stage is about reporting and disclosures. Each and every stage is important. Any kind of non-compliance at any stage is going to put us in trouble. Whether we have some kind of a not having proper understanding and identification of related party, not having proper knowledge about identification of a related party transaction, not knowing the key terminology pertaining to related party transactions, not knowing about the nuances of approval mechanism, and not knowing about furnishing that information, disclosures, and filings. So each and every one is having its own importance, its own complexities, its own nuances. That is the reason at Mehta and Mehta why we have chosen this topic divided into 5 parts so that we can have extensive discussions. In fact, several people are appreciating this, and in fact, some 2-3 people were telling me on the other day that they are virtually waiting for Saturday. In fact, somebody also said that why can't you have a what's called as a review of all the 5 webinars in one webinar for the whole day. So this kind of appreciation, what we are getting, this is giving at least, and in fact, everyone at the firm to resolve to bring more and more significant and important topics like this. We may divide it into 2, 3, depending upon the subject. So today's this thing is approval mechanism, and as we know that approval mechanism is we have to deal with both listed companies, unlisted companies, and similarly there are 3 stages of approvals. One is the audit committee, second one is the board, and third one is the shareholders. So where we require what sort of approvals and all, Ashwini is going to deal with that. I will give a pause here and invite Bala sir, and after that, wherever we have to come in and discuss it further, we will do that. Thank you very much. Bala sir.
Good morning to all of you. I have a great pleasure in inviting you all for this important webinar. In fact, we heard last 3 webinars on the same subject. Today we are talking about the approval. As Sudhakar has put it, as it appears to me, there are only 3 approvals which are required, only the audit committee, only the board, only the shareholders. But the question arises, how to identify the related party with reference to the section. Second thing is again applying the principle of arm's length and as well as the ordinary course of business. We had an elaborate discussion on that. And again, threshold limit. And again, as he rightly said, there are provisions which are governing all the companies under the Companies Act, irrespective of it is a capital-based kinds of companies, etc. But when it's come to the listed company, we have the LODR regulation specifically covering that. And there are a lot of intricacies are there when we go to the audit committee because of the provision which is there. The audit committee can actually ratify in a 3 months period if the approval is not taken, prior approval. The question definitely will be, one should not be under the wrong impression, even if the approval is not taken, it can be ratified. If we have the 3 months time, we can do it, which is incorrect actually. Because prior approval as required to be taken, which is not taken, that itself is a non-compliance. But how to rectify the non-compliance is the mechanism which is provide ratification for the 3 months period. But nevertheless, the non-compliance still remains. This is the thing. And again, the various threshold limits, there have been a lot of amendment which also we discussed with reference to LODR regulation. The threshold limit, which was earlier 10%, now it is 10% subject to 1,000 crores turnover, etc. So today, I think Ashwini is going to deliberate distinctly what is applicable to all the companies other than the listed companies, and specifically for the listed companies, what is actually applicable, what are the precautions one has to take care. I think with the experienced people like Ashwini, Dipti, and Sudhakar, we will definitely have a great learning experience. I am very sure you all will enjoy. Please raise whatever the clarification, whatever the question, like in the past you have been doing it. Without wasting much of the time, I will pass it to Ashwini to start the presentation. Over to Ashwini, please.
Good morning, everyone. Thank you, Bala sir, Sudhakar sir, Dipti madam for the introduction. We have in our previous 2 webinars extensively spoken about related party, who is a related party, what are the related party transactions. Now, the most important aspect of any related party transaction is the approval mechanism. That is where most of the queries come from, like how to approve, who are the approving authorities and everything. So today we'll be speaking specifically on the approval mechanism under Companies Act and under LODR regulation. So I've bifurcated both these regulations for ease of understanding. So basically approvals for transaction with related party, the management has to decide if that transaction qualifies as a related party transaction, and it is the duty of the company secretary, chief financial officer to determine the approval requirements. As you all know that audit committee may or may not be applicable to all sorts of companies. So in that case, board will be the approving mechanism, shareholders would be the approving authorities, and so on and so forth. So each transaction has to be defined, the threshold limits have to be understood, and accordingly the approving authority, the company secretary, has to take the transactions to the approving authority. So as I said, first we'll talk about the Companies Act. So section 177 and section 188 are the major sections that we need to check in case of the RPT transactions. Now 188, when we talk about, it talks about approval of the board applicable, and there is no distinction between public and private companies. 188 is applicable to all sorts of companies. However, 188 talks about 2 things. One is where board approvals come into picture, and what are the threshold limits if crossed, the shareholders come into picture. Section 177 is obviously applicable only to public and listed companies, and the companies who have voluntarily adopted an audit committee. So wherever there is an audit committee in picture, approval of audit committee will be required as per the provisions of Companies Act. So this is the process: approval for entering into RPTs, audit committee, then board, then shareholder. So 177, if you see section 177 under Companies Act, the coverage is much wider than section 188. because there are transactions such as loans and guarantees are also covered. Then all RPTs have to be approved by audit committee. So there is this concept as transactions with related parties. So there is a related party transaction and there is a transaction with related party. So wherever there is any transaction that is being entered into with a related party, approval of audit committee is mandatory. The terms of reference of the audit committee also state that all transactions with related parties have to be approved by the audit committee. If the audit committee does not approve the transaction, it shall recommend the same to the board for its approval. Then approval is not required if related party transaction under 177 is entered between a holding company and a wholly owned subsidiary. And materiality concept, transactions under ordinary course of business or arm's length transaction are not relevant for RPT under 177. Why we say that is any transaction with related party is the concept when we get approval under audit committee. Sudhakar sir, would you like to throw some light on this concept?
Only thing that I want to say here is that whenever, as far as applicability of 177 is concerned, we don't need to apply our mind whether I need the approval or not. The moment you have determined that it is a related party transaction, per se, you have to take the approval unless until the same is exempted. Ashwini has already mentioned that as far as the exempted transactions are concerned. So every transaction, if you have determined it as a related party transaction, you have to take approval of the audit committee, number one. Number two, up to the Companies Amendment Act 2017, there was a confusion whether that approval was a prior approval or a post facto approval can be taken. But with the Companies Amendment Act 2017, it is very clear that you have to have prior approval of the audit committee only. And this prior approval requirement, right from the beginning, it was there in the listing regulations. There was no ambiguity. There was a little bit of ambiguity as far as the Companies Act was concerned, and which was removed after the Companies Amendment Act 2017. Yeah, go ahead, Ashwini.
Thank you, sir. So all companies which are required.
Ashwini, it is asked that please explain if audit committee doesn't approve, it shall make recommendation to. Someone has asked to explain that where audit committee doesn't approve, it shall make recommendation to the board. Please explain.
I'm not able to see that question.
In chat box, it is there.
Please explain if the audit committee does not approve, it
It's
shall make
there.
a recommendation to the board. The
In
question is,
earlier slide, it is mentioned no by you that if audit committee do not approve, it will make a recommendation. Your green.
Yes, yes.
So
So
yeah.
So recommendation to the board has to be made wherever the audit committee is not approving that kind of transaction, or if that transaction as I said, there are approving mechanism under the audit committee board. So certain transactions have to go to the board. And so there is a distinction. One is the transaction with a related party and all related party transactions. So the related party transactions cannot be approved. They have to be recommended by the audit committee to the board. That is the understanding. And all transactions with related parties will be approved by the audit committee. Hope I am clear.
Yeah, go.
See, let me say one thing in here. See, question is whether audit committee, whether per se it has to approve every transaction, or audit committee can also disapprove a transaction. That means it is not approving a transaction. Or sometimes it may so happen that audit committee is not in a position to decide to do either way, and it is leaving its decision to the board. Recommendation means what? Is it a positive recommendation or a negative recommendation? There are 3-4 aspects are there here. If audit committee is approving the transaction, then obviously if it requires to go to the board under 188, it will go to the board and then board has to take a call. Second scenario, audit committee is not approving the transaction and audit committee has disapproved the transaction. They say, no, we don't agree with this transaction. Now the question comes, can the board take a call? Can the board approve it? There is a slightest this thing that one school of people are saying that no, audit committee, because of that 177 subsection 4, if I am not wrong, it says that audit committee has to approve. Some wording is there. Because of that, they say that board cannot do it. But majority of the people in the guidance note, this particular aspect has been dealt with. Kindly go through that. Audit committee is a subset of the board. Board is always superior. If audit committee is not recommending, audit committee is not approving a transaction, that doesn't mean it is the end of it. According to me, board is superior and board can always take a call and can approve the transaction. Only thing what will happen is that as required under section 134, the board in its report has to say that why it has what's called as not acceded to the recommendation of the audit committee, or why it has approved a transaction which was disapproved by the audit committee. That is to be explained. And in addition to that, there is one more aspect is that now question of recommendation. Can audit committee recommend a transaction? As such, if I'm not wrong, nowhere in 177 they have mentioned that audit committee can recommend it. It has to approve it. Then I have to approve something means I can deny that also. But where is the question of recommendation? So there it is not a kind of recommendation. Audit committee may say that, look, we are not in a position to decide this based on the information available with us or within the wisdom available with us. We are not in a position to decide. So we are referring the matter to the board. So it is not a recommendation. Recommendation means what? I am suggesting that you may approve the transaction, or we are suggesting that you disapprove the transaction. What does that mean? Second one, negative recommendation is not a recommendation according to me. Only thing is that when audit committee is not in a position to decide the issue, then it can refer the matter to the board to take a final call. That is different. And one more thing also, say for example, as an audit committee member, I am denying a transaction. There are 4 audit committee members are there. Say for example, Balakrishnan, Dipti, Ashwini, myself, we are the 4 audit committee members. And 3 of us have denied that. Only Balakrishnan has approved it. All the 3 of us have denied it. Now this matter has gone to the board. Now board is taking a call. That point of time, can all 3 of us have to necessarily deny the transaction, or can we approve the transaction also? And suppose if I am approving the transaction, it means maine dal badal diya. It is not so. What happens is that when I was wearing a cap of audit committee member, that point of time, the information available with me, the explanations given to me might not be sufficient, or the wisdom of the 4 audit committee members might not be sufficient. When it has gone to the bigger platform, that means to the board, where there may be 13, 15 members are there, that point of time might be the CEO or the CFO who was not there in the audit committee might have joined there and have explained the information, the transaction in a more better way. And collectively as a board, our wisdom also are we got the clarity more and we approved the transaction. So once I have denied the transaction in the audit committee, not necessarily I could deny at the board also. I hope now I could give all the what's called the different scenarios. Number 1 and number 2, the more rational and the discussion is there in the revised guidance note. One may go through that also. Yeah.
Yes, thanks, Sudhakar. Yeah, Ashwini, go ahead.
Yeah. So audit committee approvals, section 177 talks about the approvals are given by the audit committee. So all companies which are required or have constituted audit committees are required to take approval of audit committee for all the transactions to be entered with a related party and all the subsequent modifications. Considering that section 177 does not refer to section 188, approval of audit committee is required for all the RPTs, irrespective of whether they are in the ordinary course of business or not, or on arm's length basis or not. Then in case the transaction involving amount not exceeding 1 crore is entered into by any director or officer without approval of the audit committee, and it is not ratified by the audit committee within 3 months, then it is voidable at the option of audit committee. So here it is important to note that even if the transaction is, which required an approval and the same has not been taken, and later on any ratification is done by the audit committee, the non-compliance still remains because it talks about the approval thing. So it's a prior approval under 177. If you have not taken that and you have ratified, so it is voidable at the option of the audit committee. However, it is ratified later, still the non-compliance remains in case of not taking the approval. I think there is a question in the chat box. This is the answer to that. So this is again a repetition, but all transactions with related parties, they require approval of audit committee under 177, and this approval is not restricted to only RPT under 188. Then there is a difference between related party transactions and transactions with related parties we have explained earlier. Though the transactions are in ordinary course of business and on arm's length basis, they will still require the approval of the audit committee. All companies which are required to constitute or have constituted audit committee shall require prior approval. Everywhere the word prior approval is mentioned. So prior approval you have to take before entering into any transaction. Then only transaction up to 1 crore entered into any director or officer can be ratified by the audit committee. And audit committee can make omnibus approval. So omnibus approval we'll be speaking about in the later slides. So rule 6A talks about the omnibus approval. The audit committee shall, after obtaining approval of board, specify criteria which shall include the following: maximum value in aggregate in a year, maximum value per transaction, and level of disclosure. So depending on the kind of transaction, the repetitiveness of the transaction, the board will decide the approval criteria, and accordingly the audit committee will approve the omnibus, will give omnibus approval for a financial year. So the approval given by the audit committee will these transaction details will have to be placed before the audit committee. That is the maximum value in aggregate in a year that may be entered with the related party, maximum value per transaction, what will be the level of disclosures, has to be placed before the audit committee for their approval of omnibus. So once it is given, the review will be done on a quarterly basis to understand the transaction value. There has not been any breach in the approval that has been given by the audit committee. Then it will be reviewed on a quarterly basis, and the report will be given by the management to the audit committee members. Then the transaction which cannot be allowed under omnibus approval is selling of any undertaking. So it is not in the routine business of the company, or which is not repetitive in nature, cannot be brought under the omnibus approval route. There has to be a justification, there has to be a repetitiveness for that kind of transactions to qualify under the omnibus approval mechanism. So these are the relevant disclosures that are required at the time of taking the omnibus approval. That is the name of the related party, nature and duration of the transaction, maximum amount of transaction, what will be the base contracted price, omnibus approval, other important information and relevant information. All this is given, the justification, rationale for entering into that transaction. Everything has to be placed before the audit committee. So under Companies Act, it is said that omnibus approval is valid for a maximum period of 1 financial year and shall require fresh approval after expiry of such financial year.
There are 2 questions have come actually. One is actually, what is the meaning of undertaking? That's the one question is there. There is another question which has come actually. Please explain the details of the approval of the board or the criteria of the omnibus approval.
So the undertaking portion, would you like to take up?
What is the undertaking? In what connection it was?
Sir, it is not a repetitive transaction. So I just mentioned an example.
Okay. Achha, selling of undertaking.
Selling of undertaking.
which is not,
You can take it as 181A.
yes.
Undertaking means what? And actually, in this particular sense, Ashwini has just given an example. So you don't go as per the undertaking. But when you are going under section 180, you have to go as per the undertaking definition also. So here also you can refer to under section 181A. Whenever anything, any capital expenditure is there, whenever you are selling any capital asset, it may be a vehicle, it may be a plant and machinery, it may be a building, any capital asset which you are selling it, suppose it to a related party, you cannot take an omnibus approval. That's what Ashwini is mentioning. To put in context, as far as the omnibus approval is concerned, as Ashwini has rightly mentioned, the transactions are to be, number one, revenue transactions. Number two, the transactions are to be repetitive in nature. That means it cannot be a one-off transaction. What is one-off transaction? As I have mentioned to you, capital assets, sale of capital assets, or sale of any mobile assets, anything, those are all not a transactions on a repetitive nature. So those kind of transactions, what are transactions which are repetitive in nature? Purchase transactions, sale transactions, rendering services, availing services, or payment of interest, receiving interest. These are all the the financial transactions, investments, loans, borrowings. These are all the transactions which may be repetitive in nature. Second thing is that omnibus approval, the validity of it is one financial year. That means from April 1st to 31st of March. Please remember one thing, when you are taking omnibus approval, and for the next financial year, omnibus approval is to be taken before commencement of the financial year. Means what? Because as we know that right from 1st April onwards, the transactions with related parties might be continuing. Now the question is, if you say that my board meeting or my audit committee meeting is going to be in the month of May, when I will take the omnibus approval, but what will happen to the transactions which have entered during the month of April and part of May? That's why what happens is you have to ensure that your omnibus approvals for the financial year 23-24 are to be in place by 31st of March 2023. Whether you hold the meeting, a separate meeting in the month of March or the month of February, or you do it in the month of January meeting, it is up to you. Because in January, what we always normally do is, whether it is a listed entity or subsidiaries of the listed entity, you hold a meeting for approval of the third quarter results, that is December 31st results. So at that point of time, definitely you have an audit committee meeting. So you can take omnibus approval for the financial year 23-24 in January meeting itself. Some companies, what they do is they also hold a meeting for the budget, that is called as budget meeting normally. For the next financial year budget, they do it in the month of March meeting. In such case, you can take it in that meeting also. It is up to you, you take it, how you are going to take that thing. But please ensure that by whenever you are entering into a transaction on 1st April with a related party, your approval of the audit committee is there prior to that. But without that, if you enter, that means you are not complying with the provisions of the Companies Act. And another important thing is the criteria, omnibus approval, the criteria for omnibus approval. This criteria is to be recommended by the audit committee to the board, and board has to approve the criteria. And as per that criteria, audit committee has to give its approval. So for the first time, when you are determining the criteria, what will happen? Of course, by now, almost all the companies might have got the criteria approved definitely. But in the beginning, this was a lot of questions used to come, how this is to be done. So first, audit committee has to determine the criteria for related party transactions. That means that the omnibus approval criteria. It is to be given to the board that as for the maximum value of transaction per related party, what is the maximum value of per transaction, all the details, whatever are there in the rules, that is to be recommended to the board. Board has to approve the criteria. And that after that, the audit committee again has to meet, and based on that criteria, it has to give its approval for omnibuses. And this criteria, can it be changed? Yes, definitely. The criteria can be amended. But as and when you have to amend the criteria, again, you have to follow the same procedure. Audit committee has to approve that modification or amendment, and it has to go to the board. Board has to approve that. It has to come back to the audit committee. Based on that, audit committee has to give its omnibus approval. Yeah. Go ahead, Ashwini.
There is another question which has actually come. If a listed holding company gives a corporate guarantee in favor of unlisted wholly owned subsidiary to bank, do it need to change guarantee fees? If yes, what are should be the charge to make an ALP basis?
See, guarantee fee is not mandatory. Whether suppose whether it is a wholly owned subsidiary or it is a subsidiary, guarantee commission is not mandatory. It all depends upon the understanding of the holding company as well as its subsidiaries. And especially in case of wholly owned subsidiary, there is no meaning of charging them any guarantee commission by the when the holding company is giving a guarantee on behalf of its wholly owned subsidiary. Number one. Number two.
आणि पहिली वेळ नाही हे वारंवार झालंय. एखादी आवडती सिरियल
Asawari Borkar, can you mute your mic, please? Yeah.
Second thing is that whenever the holding company has given a guarantee on behalf of its subsidiary and charged some guarantee commission, it is a related party transaction under 177. Whether it triggers 188, answer is no, because we have already discussed that in the previous webinars. Only thing I have cautioned the people was like this: when the holding company is giving the guarantees repeatedly on behalf of its subsidiaries, suppose if I am having 200, 300 subsidiaries and the holding company is giving repeatedly the guarantees, tomorrow the regulator may say that you are in the process of rendering services to your subsidiaries by way of giving guarantees. So that is the only gray area. It may happen, may not happen, but this issue may come up, if you are doing it repeatedly. In such case, what will happen? 188 subsection 1 will get triggered because it is rendering services. And as far as the other company is concerned, whether it amounts to availing services, again, the answer is no. If it is a one-off transaction, it is no. So again, this issue also is dealt with in the revised guidance note. Kindly go through that. Yes, sir.
Can board give a omnibus approval to the RPT in case of the unlisted company?
Board cannot give omnibus approval, because if you see that board's power comes only in 188.
Not under
Board has no power to give omnibus approval. Even if a company is not having an audit committee, that does not mean audit committee responsibilities will be discharged by the board. It is not so. Unlike section 135, corporate social responsibility, where there is a clear cut provision is there in the section itself, that in case there is no CSR committee under that 135(9), the responsibilities of the CSR committee are supposed to be discharged by the board of the company. Similar provision is not there in 177 or 188. So wherever a company does not require to constitute the audit committee, only the approvals what are required by the board under 188 only are required. And the transactions which are not covered under 188, board need not approve. But other sections of Companies Act, if they get triggered, those approvals are to be taken, but not under 188. And board cannot give omnibus approval. It's not empowered to do so.
I also would suggest to the questioner to refer our last webinar. This aspect has been very, very elaborately discussed. The webinars are actually available in the recorded YouTube. Kindly go through that. You will get a more clarity than what it is. Okay. Thank you. There is a transaction in the subsidiary company which requires the holding company approval, and the approval is not sought. Then non-compliance will be for holding company or subsidiary company.
Whichever the company has to comply with, which has not complied, that company has to face the penal consequences.
Okay, go ahead, Ashwini.
Okay, so whether transactions between holding company and its wholly owned subsidiary, in that case, whether section 177 is attracted. So the such transactions approval of our audit committee is not required. It is specifically given in the 4th proviso of sub-regulation 4 of section 177 and also in regulation 23 of LODR. However, it is important to note that when this exemption is given, it is specifically saying that transactions falling under 188 will require approval. So any transactions that require approval under 188 have to follow the process, but rest will not be required to take SEBI approval is the understanding. So approval of the board. So everywhere we are mentioning now we have completed the audit committee and omnibus part. Now we'll see what are the approval mechanism by the board in case of the related party transactions. Section 188 provides that approval of related party transactions mentioned under clause A to G. So everywhere where the transactions fall under those criteria, the transactions cannot be entered by the company without approval of the board at a board meeting. So this is a transaction which specifically requires a board resolution passed through a meeting of the board and not through circular. However, board approval of board is not required for transactions which are in the ordinary course of business and on arm's length basis. Here it is important to note that this is applicable to only unlisted companies because LODR does not distinguish between the ordinary course and arm's length. All transactions are requiring approval under LODR mechanism. So all the companies which are required to follow only Companies Act, for them, if the transaction is in the ordinary course of business and on arm's length basis, then approval is not required. And I think this has been elaborately dealt with in the previous sessions also on RPT. So as I said, this is an important criteria when you're presenting before the board for the approval. What are the information that you have to place? That is the name of the related party, the particulars of the contract, then the manner of determining price, other items, material terms and pricing, advance paid received, all relevant factors you have to place before the board before getting their approval for any related party transaction from 188(1)(a) to G.
Sudhakar sir, one question, sorry to.
No, go ahead.
In many companies in the criteria for audit committee, they clearly specify that this information should come as a certificate from the managing director or the CEO and the CFO. So is it, it is derived from the law or is it derived by the board's mandate?
It is only the internal this thing because to insulate the committee as well as the board or to give a comfort to the audit committee members and the board. Because even in Reliance also what we do is the CFO of the company give a certificate on quarterly basis to the audit committee that the transactions entered are in the ordinary course of business and at arm's length basis. And wherever the, that apart from that thing, of course, the omnibus approval, whatever is been taken, that will be reviewed. There, what they will do is that give that the approvals vis-a-vis that in the first quarter, how much, second quarter, how much, cumulative, how much. And in between the year, wherever an excess approval is taken, say, for example, for purchase of goods, we have taken an approval of 1,000 crores. But in the 2 quarters, only 20 crores have been availed. Similarly, still 980 crores is there. It is the responsibility of the audit committee to question the management why still 980 crores have not been utilized. Then definitely they may explain that this is a particular purchases or seasonal purchases. This is going to be availed in the second half of the year. Or alternately, they say this is because of the market conditions. The audit committee can say we want to reduce the limits. It can be done. That is what review is concerned. Sometimes it may so happen that the limits have to be enhanced. Suppose, say, for example, the entire year 1,000 crore limit is taken already in the second half of that thing. When I am reviewing it, 950 crores has been utilized, only balance left out is 50 crores. So either the management has to come so moto to enhance the limits, or alternately audit committee has to question that you are left with only hardly 50 crores. Are you not going to utilize, it is sufficient or you want any further this thing? That is basically what is expected when the review of omnibus approval means. It is not like that it is static in the beginning of the year. It can be amended. Either it can be reduced or it can be increased also.
And Sudhakar, even the type of transaction, if there is a change in the, because there will be particular transaction which will be repetitive. So in particular year, there can be a particular transaction which is going to be repetitive.
It
So
can,
it can be change, even the transaction also, you can include, exclude, and that also. can be.
yes, yes.
I fully substantiate what Sudhakar says actually. As Jambunadan has raised it, there is nothing on the legally or something like that. It is totally the internal mechanism. Because the responsibility has been given to the audit committee for giving the approval, they would like to ensure that everything is actually in the arm's length and as far as the ordinary course of the business. In most of the companies, wherever I have worked, normally what happens is Sudhakar puts it in their company, they used to take a certificate to the CFO. In the other companies, I also seen it is jointly, thrown the responsibility to the tax department as well as to the finance department. They together examine ordinary course of the business. They normally do that. That is the internal procedure which is set up to give the comfort level to the audit committee. Before they approve, they are ensuring the record compliance is placed. The transactions are in fact in the ordinary course and also in the arm's length. That is the purpose.
See, second thing, let me also put it like this. Whenever you are asking any official to give a certificate, they will be alert. They will be agile. Otherwise, what happens is that somebody says, sir, it is in the ordinary course of business, arm's length, okay, let it go. But the moment the CFO has to put his signature, then he will doubly sure that by what is the mechanism. You explain to me that. And similarly, when the stakes are very, very high about this arm's length, that transfer pricing guidelines and all, when we apply it, in Reliance, we used to do a third-party audit of all the related party transactions. Because of the stakes are very high, all thousands of crores of transactions to take place, related party transactions. So tomorrow, God forbids, if somebody questions and where you will go and get it justified. So what we did was, right from the beginning, across the group, every transaction gets a third-party audit at the end of the year. Okay.
There is a question that LODR does not talk about bond.
Now let me explain that Ashwini, this is in fact, yesterday also we were discussing the same thing. Let me explain once again, despite the fact that I have explained this in our previous webinar. Please go to your previous slide, I think, where this ordinary course of business thing is. The previous one. Previous. Yeah, this one.
Yeah.
See that when Ashwini has said that this ordinary course of business and arm's length basis, these transactions are exempted from 188 provisions. Forget about for a moment approval of the board of directors or what. These transactions which are in the ordinary course of business and arm's length are exempted from 188. And this kind of exemption is not there in listing regulations. But listed entities or listed companies, I mean, they are to be complied with the provisions of Companies Act as well as listing regulations. As Rupal has rightly mentioned that, no doubt about it, listing regulations talk about only audit committee approval and shareholders approval. They don't talk about the board approval. That's what her question is. Now, 188 is not confining itself only to the board approval. 188 also talks about shareholders approval. Now, how this exemption will be useful to a listed company? Say, in case of listing regulations, the listed companies have to go to the shareholders approval only when there is a material related party transaction. And till 31st March 2022, the definition of material related party transaction was 10% of the consolidated turnover. In the last webinar, I have given an example. Suppose if Reliance's consolidated turnover is 450,000 crores, 45,000 crores is the limit to determine the material related party transaction. If a transaction with a related party goes beyond 45,000 crores, then only I have to go to the shareholders to take their approval. Otherwise, it is not required. Now, of course, it has been reduced. Actually, it is 10% of the consolidated turnover or 1,000 crores, whichever is less. Now the pendulum has gone from one extreme to another extreme. This is a different thing now. Now, if you see the 188 and the rule 15 connected to that, in the rule 15, what it says, shareholders approval is required when it is 10% of the standalone turnover, right? So now the question is, material related party transaction is 45,000 crores. My suppose say standalone turnover of Reliance Industries is, say for example, it is 300,000 crores. That means 10% of that is 30,000 crores. Whereas under the Companies Act, I have to have 10% of the standalone turnover. So it is not 45,000 crores, but it is 30,000 crores. But because if it is in the ordinary course of business and arm's length basis, the rules are also not applicable to me. Neither section 188 is applicable, nor the rules are applicable to me. So I have to comply with only the listing regulations. Suppose, say, for example, if this transaction is not on arm's length basis, or this transaction is not ordinary course of business, I cannot take the exemption under 188. So I have to go to the shareholders, even for a transaction which is 30,000 crores plus 1 rupee transaction. If it is there, I have to go to the shareholders. I cannot avail that 45,000 crores limit which was there. So it is not like that for listed companies 188, this exemption is altogether not relevant. It is very much relevant, but only as far as the shareholders approval is concerned. I hope I am clear now. But because of this amendment which has come, that now again the scenario has changed. I have to see that material related party transaction is 10% of the consolidated turnover or 1,000 crores, whichever is less. Whereas under the Companies Act, I have to go to the shareholders when it is 10% of my standalone turnover. So again, you have to see whichever is the strictest provision, you have to go accordingly and obtain the approval. Okay. Go ahead, Ashwini.
So rule 15, 2 of meetings of board and its powers also talks about the interested party. So it clearly provides that if any director is interested in any contract or arrangement with a related party, then he shall not be allowed to participate as well as vote in that item of agenda. In other words, if the concerned director is not allowed to attend the meeting, he should leave the meeting during such discussion on the subject matter of contract. So this is given under the Companies Act in respect of interested parties.
So here also several times one question comes that whether the director has to physically vacate the boardroom. Okay. And how can we ask the director to vacate? There is absolutely no inhibition as far as because if the law says that the director has to vacate the room, we can say, sir, kindly excuse us. Alternately, even if the board says, let him be there here, what is the problem and all, he will not participate and all, but you have to minute that very clearly, that as if he has vacated it, because law says that he has to vacate the room. Okay, so you have, see, it has not said that he cannot participate in the meeting, he cannot vote at the meeting and all. He said that his presence is not to be there in the meeting room. So at least you have to minute it that as if he has vacated the room. Yeah.
So last, we'll see what are the exempted transactions under the Companies Act. Board and shareholders approval under 188 is not required for transactions entered into ordinary course of business and on arm's length basis. However, transactions, there is no exemption from obtaining the approval of the audit committee, because all related party transactions require approval of audit committee. We have discussed earlier. This exemption is not available for listed entities under the listing regulations. Transactions which do not exceed the threshold limits as given in the rules as well as the section are exempted from obtaining shareholders' approval. And in case of listed entities, only material related party transactions require shareholders' approval. So There are the threshold limits given in the rules regarding what approval can be taken up to what board can approve a certain transaction, and beyond that, those threshold limits, as sir was saying earlier, you have to take the shareholders' approval. So the rules have to be checked before determining the approval mechanism for the purposes. Then there is a question. In case of a public company, there are 3 interested directors, and there are only 3 directors, and all are related to each other and also interested in a particular item. What will be the consequences in such a situation? So this is a very pertinent question. Every time there is a question regarding if all the directors are interested, then who will approve that kind of transaction? Then the only way it is to place before the general meeting, as only disinterested directors can approve the item. Also, at the general meeting, if 90% or more of the members are related to promoter or a related party, then they can vote. It is specifically given in the 3rd proviso of section 188(1). In case of a private company, the above restrictions will not apply, subject that is disclosure is made at the meeting. So we were talking about the threshold limits. What are the threshold limits beyond which we need to take the shareholder approval? For sale, purchase or supply of goods and material, 10% of the turnover audited balance sheet for the previous financial year. For selling, buying of property, 10% of the net worth audited balance sheet of the previous financial year. Leasing of property, 10% of the turnover. Then availing or rendering of services, 10% of the turnover. Appointment to any place or office or place of profit, it is 2.5 lakhs per month, monthly basis. And underwriting the subscription of securities, it is 1% of the net worth. So wherever these threshold limits are mentioned, the moment there is the threshold limits are breached, or if there is going to be a transaction, as sir said, even of 1 rupee exceeding the threshold limit, you will have to take the shareholders' approval.
There is one question has actually come here. Who will actually do the 3rd-party audit? How do we see that the transaction of ALP and ordinary course of business? Dipti has already answered that we do it actually. In fact, we also got it done, one of the big 4 firms actually, in one of the company where I was working. So it is, company has to identify who some of the professionals they want to get it done. It is up to the company. Law does not say it is. It is only, as we discussed, is a comfort level. So you can identify the professional. Interest means the interest under section 184.
In fact, Bala sir, that let me intervene here just to add this. In one of the in Hyderabad chapter, if I am not wrong, when I was talking about this RPT, when I have mentioned that about this 3rd-party audit, somebody questioned me that whether this audit is to be done, this 3rd-party audit is to be done only by a chartered accountant, or a company secretary can also do it. My answer to that was, it is always advisable, because anyway statutory auditor is auditing the accounts. It is there because the statutory auditors too have to give comment about the related party transactions in Kara report. I said that why not to take this 3rd-party audit from a company secretary's firm, a PCS firm, because they are fully equipped with to do this kind of an audit. What they are doing it here, whether it is in the ordinary course of business or not. And similarly at arm's length pricing, that's it. Those are the 2 things. That is what they are doing it. So if you are, whether you can get it done from your secretarial auditor or not, it is a different thing. There is no bar according to me, even as per the institute rules also. I'm not very familiar with that, whether PCS can do the secretarial audit as well as this 3rd-party audit. According to my wisdom, there should not be a bar as such.
No bar according to.
In fact, Sudhakar, there are a couple of people who are doing the 3rd-party audit by the company secretaries also, as I am aware of it.
Correct. Yeah.
That is there. Another question has come, is there any parameter to do audit about the ALP in the ordinary course of business? Parameter means we'll have to go by the...
The proper audit,
Yeah.
it's a depend on the each company, their business, their transactions, composition. It's a very subjective.
Correct.
These parameters we have discussed at a great length in the last webinar. So this ordinary course of business and arm's length is concerned. We have done that in the key terminology. That is what we did it in the last to last webinar, I think, if I am not wrong. So please refer to that, and then you will come to know about that very clearly.
RPT transactions which are in the ordinary course of the business and or in the arm's length, they require to be entered in the register of contract, especially in the case of the unlisted company.
See, whether it is a listed company or unlisted company,
Rules are the
Right.
same.
rules are the same.
Same, that is right.
And section 188 is exempted, not section 189. So people think that the moment it is in the ordinary course of business arm's length, everything is what's called exempted. Not so. Only 188 provisions are exempted. As far as 189 is concerned, wherein you have to maintain a register, that register you have to make the entry, despite the fact it is exempted under 188.
Correct, sir. I agree with you. If a contract is entered with a related party for a period of say 3 years, we'll have to take the specific approval of the audit committee. Now, do we need to take the omnibus approval on a yearly basis? Yeah, answer was there. It is only for the year at a time. So it cannot be 3 years or 4 years consecutively every year. That also prior approval. Sudhakar has explained very well on this, I think so. Yeah.
See, here, if I am not wrong, the question is like this. If a contract is entered into with a related party for a period of say 3 years, if it is that 3 years contract, wherever
sir.
shareholders approval is required, you don't need to go to the shareholders again and again. Only one time approval is sufficient.
Correct. That is
But
right.
as far as the audit committee is concerned, because the transactions in that financial year, they are to be approved by the audit committee. So you have to take omnibus approval also.
Yeah, omnibus approval has to be year to year basis, as you rightly explained actually.
Yeah.
But shareholders approval need not be because they can give one-time approval for the entire contract that is there.
Unless there is a modification to the terms.
Yeah, that is right. Modification, if any, that again needs for the approval. That is true. Yeah. Go ahead, Ashwini.
So now we have covered related party transactions under Companies Act and the rules. Now we'll talk about the approval mechanism under SEBI LODR. So Regulation 23 of SEBI LODR mandates related party transactions, their disclosure and the approval mechanism. What we have done is we are not going through detail, but I have tried to bring in the major amendments that have come in since 2022. So the first major amendment that has been brought in is about the materiality of any transaction. So which kind of transactions require shareholders approval. So as on 1st of April 2022, the transaction with any related party shall be considered material during a financial year if the same exceeds rupees 1,000 crore or 10% of the annual consolidated turnover of the listed entity, whichever is lower. So these threshold limits have been explained by Sudhakar sir earlier also. The moment you cross these limits, shareholders approval will be required under the SEBI regulations. Second amendment that has been brought in is about the related party transactions and subsequent material modifications. So these shall require prior approval of the audit committee, provided that only those members of the audit committee who are independent directors shall approve such related party transactions. So these are the amendments that have been brought in, and the audit committee of a listed entity shall define the material modifications that will happen. So first is at the time of entering into any transaction, and subsequently if there is any modification to that transaction, that criteria has to be decided by the audit committee, and all the subsequent material modifications have also to be prior approved by the audit committee. This is the amendment.
Yeah, Ashwini, just 2-3 things I want to add in the previous slide. Yeah, see here, number one, these subsequent material modifications, if any. That means once you got the approval under 23 subregulation 8, where you require the shareholders approval, if any transactions are there, unless until there is a modification is there. Earlier, the concept of material modification was not there. They have just mentioned unless until there is the modification, you don't need to have the approval. But whereas now they have brought the concept of material modification, and fortunately, that what is material modification, it has been left to the companies only. They have not said that in this percentage or the limit or whatever it is and all. This is the only saving grace what SEBI has given according to me. So now who has to determine what is a material modification? As mentioned in the previous webinars, the material modification is to be determined by the audit committee based on the guidelines provided by the board in the RPT policy. Every listed company has to have a policy on dealing with the related party transactions. In that policy, they have to give the parameters based on which the material modifications are to be determined. That is one aspect. Second aspect is that the related party transactions are to be approved by the independent directors. In one or two forums, I have been asked one question, and in fact, when we were also drafting the revised guidance, thought this question has come up. Whether the executive directors who are members of the audit committee can continue to be in the meeting, or they have to excuse, or the independent directors can ask them to excuse them. That means, can the independent directors ask the executive directors, please vacate the room? We want to have a discussion among ourselves with the CFO and CEO of the company. Again, there was a divided opinion, but majority of the opinion is like this, that when the independent directors have to approve the transaction, the moment the executive director's presence is there in the room, it will certainly influence the definition, the decision of the independent directors. Similarly, when the CFO and CEO are being consulted, the presence of the executive directors may also influence the amount of information what they are sharing. So because of that, it is the decision of the independent directors whether to allow the executive directors or to ask them to excuse themselves or not. Third thing is that, okay, executive directors, though they are not voting at the transaction, they will not be what's called as counted for the purpose of quorum. Is it so that they cannot even participate in the discussion or debate? That is another question has come. Can they participate in the discussion or debate? Again, the same thing, the majority view is that the moment the executive director is participating in the discussion, he will influence the independent directors to approve the transaction. Because when that regulator is asking that independent directors of the audit committee have to approve the transaction, means they should examine the transaction dispassionately and have to approve or disapprove the transaction. The moment executive director is there, he may influence the decision of the independent directors. So to protect the independence, the independent directors can ask the executive directors not to participate in the discussion or debate. They may even to go to this extreme of asking themselves to excuse them. That's what my view. Yes, Ashwini, please go ahead.
So this is another important modification that has come, amendment that has come in, is a related party transaction to which the subsidiary of the listed entity is a party, but the listed entity is not party. Shall require prior approval of the audit committee of the listed entity if the value of the transaction individually or taken together with previous transactions during a financial year exceeds 10% of the annual standalone turnover. So listed entity is not a party to that transaction, but its subsidiary is a party to that transaction. Then all the transactions that are exceeding the 10% annual standalone turnover of that listed of that subsidiary will come to the audit committee of the listed entity for approval. So though not being a part of that transaction, still it has to approve those transactions.
One question has actually come. Our company is doing a transaction with a company in which our independent director acts as an executive director. So whether this will be treated as a related party transaction.
You have to determine whether it is a related party first. If it is a related party, it is a related party transaction. To subsection 76, you'll have to determine whether independent director is your related party.
Correct.
Then again, following
There is
that, I
one
think,
more question.
yeah, as told that the interested director would, 1 minute, that the interested director would not vote. Is it the interest as defined under section 184, or even it is somehow related party but not interested as per the section 184? Still, he should not vote.
See, whether he is interested under section 184 or not, the moment if that whether directly or indirectly, if the concerned director is interested in the related party transaction, he should not vote. Because it is a conflict of interest. He should not vote.
In case a listed entity, a joint venture, does this also cover under this? Under this act mention only subsidiary. I think this we have discussed elaborately in the earlier webinars, I think.
See,
I
not
think-
only that.
Yeah.
As company secretaries, we should know what is a joint venture and what is a subsidiary, because it is very clearly defined. Because under section 2, subsection 6 clearly says what is a joint venture. And similarly, that we have a definition for the subsidiary also. So subsidiary and joint venture are not combined. They are two separate things altogether. So whether the listed entity has a joint venture, does this also cover under this? As it mentioned only subsidiary, it is all different. If it is, I mean, one has to read the section, one has to read the rule and strictly comply with that. That's it.
Due respect to Sudhakar,
Yeah.
some more other, I still continue to have my feeling today's youngsters, they are only doing a surface reading. They do not go through into the details of the reading of the act and rules. I don't want to say, but repeatedly, it is actually happening. It is actually seen. I think our habit of, reading, understanding, interpreting need to improve a greater extent, especially with the today's youngsters. It is not only just getting through the examinations, but understanding the things. My humble request to
See,
everybody. Yeah.
No. See, that Bala sir, I do appreciate, but let us not generalize it that there are very, I mean, I have a lot of youngsters who are very smart guys. It's not like that. I mean, only the people who are aged only are the wiser people. It's not so. There are a lot of youngsters are there. But at the same point of time, what you say is correct to a large extent. To a large extent, the amount of study what is required, unfortunately, it is not going. But at the same point of time, let me say one more thing also. In one of the seminars, someone met me and he said that very few people are telling the way you and me are telling them. It is also equally important. See, for example, when till the time I joined in Reliance Industries, the way I was reading Companies Act prior to that, the way I started reading Companies Act, I mean, I can say pre-Reliance, post-Reliance. Because when I was working for Reliance Industries, when that every section, the way we were complying with and then reading it, together with my boss and all, with Seturaman and all, then I said that, yeah, till yesterday, what I was reading Companies Act, that is not the way how it is to be read. Because what happened that sometimes it may so happen, for the companies what you work, for the type of bosses with whom you work, also it depends. Some people say, kaam chalao, that is a different one. Whereas some people say, no, first of all, you study that. Suppose if you come to a problem, that's why I said, if I'm not wrong, in one of the webinars on Mehta only, I said this. Even I mean, Ashwini can vouch for that. Whether if anybody asks a question, we say, first of all, what is your opinion about it? So you cannot simply ask a question in the webinar and say whatever we say, take it as a gospel truth. First of all, you have to say that, what is your view on that? And then you ask the question, is it correct or not correct? Several times in the WhatsApps also the same thing happens, that people put the questions, and that questions, if one take the effort to read that, he will himself come to know the answer. So it is work both ends also. Sometimes the way we groom the people, how many of us, how much efforts we are putting, how much pains we are taking, that also is equally important. If your subordinate comes to you, you give a solution, isse matha peche kaun karega yaar, theek hai, bhai ye kar lo tum. That is one way of looking at it. Second way of looking at it is, koi baat nahi, tum ek do ghante laga ke padh ke aao mere paas. Then I will give you the solution. That is another way of looking at it. Okay.
One of our employees is the relative of the promoter, and in case of the office of the place of profit, whether the vote cast by the promoter for exceeding the limit of the office of place of profit will be considered while counting.
Sir, again, the same thing. Last webinar also, we said that these kind of questions we should not answer in the webinars. These are all, I mean, not an interpretational issues. These are all single one-to-one questions. And how much information you are giving, how much information we are understanding. And if we say yes or no, something like that, it will be give altogether a different this thing. So you please approach Ashwini formally and she will tell you the answer for that. Maybe accompanied with a small bill.
No, actually, you know
No,
what
because-
happens?
Yeah,
That
sorry.
I say that the law is static,
Yeah,
but your answer get changed to each question. You refer 100 times because your question is changed. All your facts is your question. On the facts, the question get formed and your answer get changed. So every fact is a different question. So you can't be having static answer. Each facts, each situation, each circumstances, each company, the same thing answer will be changed.
Dipti,
So it's a real detailed thing because your question is changed. That is to be kept in mind.
Dipti, I don't know when we used to be, some sort of the leadership meeting, etc. We were actually told, ask 5 times why until you reach the bottom of the surface. Every time you ask the why, then whatever the explanation comes, the whole scenario gets actually changed.
Changed.
I agree with
That
you.
is the standard thing I ask anyone comes, I said, why this action is taken? First ask that why, then you will get the reason. And then you enter that question zone only, that what you want to find. What
not only
answer
that,
you want.
see that several times when a client comes to you for a legal opinion, we always ask for the case for opinion to give it in writing. Why that case for opinion is required? Because what happens is that whatever the questions you have to put it in black and white. Let me understand that what you are saying. And after that, if I need further information, I will ask you before I give my opinion. So here simply you say that he is my relative and whether I am a related party or not, I say okay, not okay. This is not correct.
Yeah, there are.
Section 276 excludes the independent director from the definition of related party, but ideally they should be treated as related parties. There is a question is asked to Sudhakar sir. Sudhakar sir, please throw some light on the following clause with effect from 1st April 2023. A related party section in which the subsidiary of the listed entity is a party.
Very long.
Yeah, it's a very
Bala, this is very long question.
yes.
It's reading takes time. I
Today-
think this is not the right time and place actually. We can take short question like this, getting interest on debentures from holding companies RPT. I think we can skip earlier question. It will be, otherwise we'll not able to finish this.
Okay. Go ahead, Ashwini.
Yeah.
See that this question actually he has unnecessarily has reproduced the whole thing. He would have simply referred to the recommendation only. What his question is that what is the relevant financial year for the 10% limits and all the relevant financial year latest audited financial statements. So if I am looking at this amendment has come into force from 1st April 2022. So for implementation from 1st April 2022, that your last audited financial statement is 31st March 23. If it is not available, then 22. That is simple. It is.
Last available audited.
Correct. Yes.
The
That's it.
day you are deciding, just check what is last audited available. Take that, whatever be your date.
Correct. That is one simple.
Ashwini, I think you can go ahead now.
Even the next question is relating to the purpose and the effect. But I think this question we will not answer here. The purpose and effect has been elaborately discussed in the last webinar. So people are requested to kindly go through the last recorded webinar. You will get the excellent answer on the purpose and effect.
Yeah, Ashwini, go ahead.
In fact, let me say one more thing also. Purpose and effect, to my knowledge, I don't think in any webinar so far has been discussed. Only it was discussed on our platform only. Last
Yeah,
week
you
we have
mentioned
discussed.
it specifically.
Yeah, you have given,
Webinar we had.
you have actually taken the real example and you have actually analyzed, you have put it very nicely last time. In fact, I could see lot of appreciation was there for that matter. Even myself, I said I would like to give a standing ovation to you. So let the questionnaire be referred to the last recorded seminar to understand the
You
things.
become a guru for so many people and you have squeezed your knowledge and experience in that entire discussion. So I think we will not repeat that.
Please
But,
put all your webinars on the YouTube. It is already available. You can actually access our YouTube
yeah,
channels.
please,
Yeah.
Ashwini, go ahead now.
As a senior person, I can say,
Yes.
Sudhakar, you opened your sleeves fully so much. You know, very rarely people will do for what you have done. It's amazing. It's hats off to you.
Thank you.
Thank you, sir. Thank you for your compliments.
Yeah,
Yeah,
Ashwini.
Ashwini, go ahead.
We were talking about all those transactions in which the related party was not sorry, the listed entity was not a party to that transaction, but its subsidiaries were party to that transaction. In this, there is a further amendment that for related party transactions of unlisted subsidiaries of the listed subsidiary, the prior approval of the shareholders of the listed subsidiary shall suffice. This is because the listed subsidiary will also be required to follow the SEBI regulations. So they separately are following the SEBI regulations, regulation 23. So there is no prior approval of the main entity required in this case. This is the amendment. Then there are exemptions under SEBI LODR 23. The transactions entered into between two wholly owned subsidiaries of the listed holding company whose accounts are consolidated with such holding company and placed before the shareholders shall not be considered related party, they will not be required to take approval. Then transactions between two government companies. So transactions entered into between two government companies, transactions entered into between a holding company and its wholly owned subsidiary whose accounts are consolidated with such holding company, then transactions entered between two wholly owned subsidiaries. The transactions entered into between two wholly owned subsidiaries is the latest amendment. Further, regulation 23(9) talks about the disclosure when the disclosure has to be given for the half yearly that we submit to the stock exchanges. It was within 15 days. Now the amendment is that as on the date of the financial statement that are we sending to the stock exchanges, on the same day you have to give the related party transaction disclosure to the stock exchanges. So on the same day it has been made. The financials are adopted by the board. On the same day, the related party transactions shall also be submitted to the stock exchanges. So this was there till 22. Now this is the latest amendment. So we have spoken about the amendments that are happened. Now the exempted transactions under the listing regulations, the following shall not be considered to be related party transactions. The issue of securities on a preferential basis subject to compliance under SEBI ICDR regulations. Then payment of dividend, subdivision or consolidation of securities, issuance of securities by way of rights issue or bonus issue, buyback of securities, and acceptance of fixed deposits by banks, non-banking financial companies at the terms uniformly applicable offered to all shareholders or the public. However, the above is subject to the disclosure. The disclosure that we were talking about this disclosure has to be made to the stock exchanges in the format as specified by the SEBI. We have discussed this that whenever there is any transaction entered without approval of the board or the shareholders, it is as per section 188, it is voidable at the option of the board or the shareholders. However, the non-compliance still remains. That means you can ratify this transaction, but the non-compliance will still remain. So till here now we have spoken about the parameters under the Companies Act, what are the audit committee approval, board approval, shareholders approval, also LODR provisions. So we have covered the technical part for the related party approval mechanism. We'll now talk about two case laws that I would like to refer in this case. So if you have any queries, you can put in the chat box. We can take it up later. This is the first case law of RT Agro Private Limited. Now, in this case, there was a company, RT Exports Limited, which proposed to enter into a transaction with another company. The proposal was for a related party transaction. So in the year 2014, they entered into a transaction with a related party. Later on in the year 2016, they passed a rescinding resolution, that is rescinding the original related party transaction resolution. In this case, SEBI said that this talks about the approval thing. So where the related parties had excused themselves at the time of entering in the related party transaction in the year 2014, at the time of rescinding, they did not excuse themselves. They were a part of that transaction. So they disapproved that transaction. They approved the transaction for rescinding the resolution. So SEBI held that this is not as per the provisions of Regulation 23 and penalized the company, and up to 35 lakhs the company was penalized. However, the matter went up to the Supreme Court, and Supreme Court has held that SEBI was not justified in taking a hyper-technical, imposing a penalty on the company for related party voting on a resolution rescinding an earlier special resolution, where the related party had abstained from the vote on the earlier special resolution in the favor. So the content here is that at the time of approval of any resolution of the related party, the related interested directors have to excuse themselves. However, when they were rescinding the transaction, there was no requirement of them to excuse themselves. They could disapprove that transaction. This is the crux of the case. And there is one more case by the ROC Delhi for violation of 118 of the Act in the matter of Lava International Limited. During the time of inspection, the inspecting officials observed that company had not placed the related party transactions before the audit committee for approval in compliance of Section 118, read with secretarial standard issued by the Institute of Company Secretaries. Order passed for this offense was company. So this is the order passed, and the company was penalized of 25,000. Then managing director and 3 whole-time directors were penalized. CFO and the company secretary were also placed. So the audit committee approval was not taken as per the secretarial standard and the guidance note of the Institute of Company Secretaries. So ROC has gone ahead at the time of inspection and penalized the company. So with this, I close my presentation. Over to you, Bala sir.
Well, as you rightly said in the case law, here we can see CFO and CS. So which actually shows what is the role we have to actually play here. As Sudhakar has been actually telling, that compliance, when it comes, it is the prima facie responsibility of the CS to ensure the compliance is actually done at any cost. That is there. Here is related party transaction is there. CFO is also has been actually penalized in this particular case. So regulator now started looking into various aspects, bringing to the books the various people who are actually involved. So in which case we need to be more vigilant and more understanding and the right interpretation. These are all the things which is actually called for according to me. Sudhakar sir, what do you say?
If you see that the way the things are going, it is a bit scary that on one side, this version 3, which is going to come, they say that the version 3, a lot of artificial intelligence tools have already been implemented in that. That is going to catch hold of the non-compliances automatically. And a couple of days before, there was a news item that ROCs are now being made free because most of the forms will go in the what's called as automatic route or whatever. There is some, this thing is there. You don't need to go to the scrutiny and all those things. So they want to make this ROCs, deputy ROCs and all free so that they will be able to focus on the non-compliances. So the scrutiny is going to be more now onwards. You know, that again, I used to repeatedly say that the data mining is starting now. Whatever the information we have furnished now, that is going to take place. So in fact, according to me, if the practicing company secretaries, they should create the awareness among the clients also that now the regulator has become very active. and because of this regulatory activism, one need to ensure the compliances impeccably. Otherwise, we will be in trouble.
There is one question that is left, I think, whether getting interest on debenture from holding company is RPT.
Yes, it is under not under 188. You don't need a 188 approval, but you require 177 approval.
Yeah, I think that's we answered all the questions.
Yeah, that is true. So the
See,
thing
one
is
more
left
thing
out.
also see that there is one suggestion, Dipti, here. We will work out, maybe our IT team can work out, Saddam, and where it is. I have given the same suggestion to ICSI also, that to put all the, there were about 7 to 8 webinars on the structural digital database. Last year there were 3, 4 were there. This year there were 2 were there. So I asked the institute, why can't you put all these at one place? No doubt about it, it is there in that ICSI platform, that YouTube, if you go, it may be there. But you have to make a struggle. So similarly, in our case also, wherever we have series of webinars like this, suppose on secretarial standard, we have 4, on RPT, we have 5, on CSR, we have about 6, 7. So on our website, if somebody go there and by way of a click, if all these webinars are at one place, the links or whatever it is, it will be easier for the persons to do that.
Yeah, I think there is suggestion also. We'll discuss and we'll work it out.
Yeah, correct. True.
I think we answered all the questions, and if there is no more questions, for the first time, we will close before 1. Since we started our session, I don't know, it's a unique thing happened today. So we'll close the session if there is no more questions.
I don't think there is any more questions.
I don't think anyone, people have
Yeah.
started living. So thanks everyone. Thanks Ashwini for your presentation. Thanks Mr. Bala and Sudhakar for your time. Thanks everyone for your participation. Next week we are back again with the last session of our series for related party transaction on disclosure. Thank you. Thanks a
Thank
lot.
you very much. Thank you.
Thanks a lot. Enjoy your weekends. Take care.